thank you very much. It's a real pleasure to be here with all of you. Thank you for taking the time to learn about NOVA, and I look forward to using the short amount of time we have here to tell you about why we're here. We started the company in 2018, and what we saw happening was not an economic change. What we saw was a change in how the world wanted to live. And so the energy transition that we're seeing right now, where you're seeing electric energy displace fossil fuels as the dominant form of how the world wants to live, is something that we saw as probably the most comprehensive change that we're going to see in our lifetimes. And having spent a lot of time in the mining business already before, what I learned was that the best way to invest in any commodity is through the royalty model. You know, if you look at the success of what the precious metals royalty companies like Franco-Nevada and Wheaton Precious have done in comparison to the gold producers. And because having a royalty, you get life of mine exposure, no costs, and all the benefits of exploration with the world's biggest companies. There hadn't previously been a royalty company focused on copper and nickel or really anything outside of gold, because gold and silver were the only commodities that had enough macroeconomic support from the investment community to warrant having a royalty company. But what we saw happening was that copper and nickel would essentially transition to becoming the new oil and coal in the world where it was heading. So we gathered an excellent team of people, and I'll go through that shortly. And we decided to start a company focused on the very best copper and nickel deposits in the world. And so after being founded in 2018, we spent most of 2019 really digging into the universe, building the team, and building the relationships all around the world to now allow us to enable that. In 2020, we really accelerated our growth. And as you can see from the portfolio we built so far, we've had a chance to acquire royalties in some of the best assets out there. Our foundational royalty is a royalty on a Taca Taca deposit by First Quantum, which is owned by First Quantum Minerals in Argentina, one of the world's very largest copper projects. We acquired that in two pieces, first in November 2020, shortly after going public, and then a second piece just earlier this year, when the same people who sold us the first royalty decided to increase their position in NOVA, and in this case, they actually took 80% of their consideration in shares of NOVA. Nueva Union, also one of the very top tier projects out there. We acquired that last February. It's a joint venture between Teck Resources and Newmont Corporation, one of the largest copper gold development projects in the Americas. The Dumont project, which is the world's second largest nickel reserve, fully permitted in Quebec. Given the need for sulfide nickel to power the automotive industry, we think this is truly one of the outstanding assets that will make it into the supply chain in the near future. And then the Twin Metals deposit in Minnesota, which is in the Duluth complex, which accounts for 34% of all US copper reserves and 95% of all nickel reserves. So we've had a pretty short life as a company. We're just over 2 years old, but we do think that we're onto something really interesting in terms of building a premier portfolio in the commodities that we think are going to be the most important in the world going forward. A little bit about us, just so you know who the people are behind the corporate name. Myself, I've been in metals and mining for over 15 years, in every capacity, in M&A banker, capital raiser, advisor, investor. And we put together NOVA in 2018, really, I think in many ways as a sum of what myself and the other people in the company had learned over time, and we saw a great opportunity. Brett Heath, he's our chairman. He was my partner in putting the company together. He's previously put together actually an existing company on the New York Stock Exchange called Metalla Royalty and Streaming. Metalla has grown from about a $10 million company in 2016 when Brett started it to over $500 million today. And we've benefited tremendously from his experience and relationships in helping to put this together. We recently had Andrew Graville join the company as a director, former senior executive at Xstrata, BHP, and Rio Tinto. Really one of the most outstanding people in the copper space. He was actually at the forefront of opening the Chinese copper market in the 90s and 2000s when he was over at BHP and Pechenay. And then what really, I think, allows us to do the good work in the downstream projects and closing transactions is our technical team. If you look at our technical advisors, we have 4 extraordinarily qualified people who allow us to really get, I think, outstanding diligence and analysis in every project we do. Part of it's Farsangi. He was our founding chairman, actually, when we started Nova. He used to be the chief operating officer of Valley Inco. So he ran the world's 2nd largest nickel business. It gives us an outstanding operating professional to review projects in an industry which is obviously very technically complex. Darren Wagner, 2-time Prospector of the Year in Canada. We're very fortunate to have his geological expertise. Christian Rios, he's based in Lima. He actually oversees our South American efforts. We've got full teams in both Lima and Santiago, reviewing projects and sourcing transactions, and that's really been a critical part of what we've done if you look at how much we've done in Latin America. And then Frank Hannegarn, former senior executive of both Newmont and Corp. So combined, we have a team that's worldwide, has expertise in every key function, and pretty much everyone has been there from the very beginning. So it's a really engaged team effort from the start. As far as the capital structure, pretty basic. Right now, our market cap is around $300 million Canadian on a basic level, about 400 million fully diluted. We're fortunate to be backed by some very strong investors, BD Capital, one of the largest institutional investors in Canada. They backed us just before we went public. So that's been very fortunate for us. Our early investors, very well-known mining investors like Adrian Day, Paul Stevens, Doug Casey, they were instrumental in us getting going. And then liquidity-wise, as you can see, we're very well supported. We just called the rest of our warrants, so we should have over $11 million in cash and an additional $9.5 million available in the credit facility. The most important thing that we saw when we put the company together was that the biggest imperative that the global community had was decarbonization. And that means clean air, that means electric energy, that means that environmental concerns are now at the forefront of global concerns. We don't live in a world which is fully commercial in the way that I think a lot of us have grown up with. There's bigger issues here that I think that the global community wants to solve. And one of the things that really we had seen was that when you're talking about taking out fossil fuels, you're really talking about just increasing usage of copper. So our fundamental thesis, when you take away everything else, is that copper is going to replace oil as the world's most important commodity. So we decided to go and get royalties on the world's most important copper deposits because we thought those would be that would be the best investment we could make, both with our time and our capital. And then if you look at copper supply and demand, this is when you realize that something has to change, because you're going to need a ton more copper, and the industry has been producing much, much less. Your supply growth has been growing around 1% a year. And if you look at any incremental copper demand scenario, you're going to need much, much more. And then in nickel, it's a somewhat different story. This is a commodity which is much smaller than copper. But when you look at the current battery technology, you're basically talking about nickel batteries, which are dominating the market, 80%. And at the same time, you look at how much more automotive nickel you're going to need. You're talking about 20 times more from 2018 to 2030. And projections, we all know projections can be wrong. But what is interesting is when you look at the chart in the right, and you see that electric cars will go from roughly 10% of sales in 2025 to 58% in 2040. So this isn't a projection. This is just a complete global change when you're talking about that level of magnitude. And when we see that, that gives us confidence to really invest and move forward, because we see something so strong and so fundamental that you can afford to be wrong in any projection and you'll still be right. And that fundamentally is how we think about everything. Everything we try to buy, everything we look at, we try to look for an order of magnitude reason to go forward, so that whenever you get details wrong, like everyone does, you're still very much correct. And I think that explains why investors have been so supportive of the company. For those of you who don't know much about the royalties yet, it really is the best way to invest in commodities because you get the annual yield that you get from annual cash flow, plus you get the optionality of everything that can happen with a big deposit, from the additional exploration, additional production, mine extension, and things of that nature. When you look at what's happening in gold and silver, where there's, as you can see in the chart below, over $50 billion of market cap among the precious metals royalty companies. Now that's really become a very popular and widespread investment model. But copper and nickel, because nobody really thought about them as strategic metals before, there isn't even a focused royalty company at the same time, except us. At the same time, when you look at the chart above, you see that gold and silver and copper and nickel are actually very comparable in terms of annual market size. So given what's happening in terms of an increase in demand for these commodities and the size of these markets, we saw a great opportunity to be a first mover as a copper and nickel royalty company, and that's exactly what we've done so far. Just here, this chart I think is very good because it shows you what kind of cost of capital advantage the market is awarding the royalty companies versus the producers. If you look in the chart on the left, you see that the senior royalty companies are trading at roughly 3 times the earnings multiple of the senior producers. Even more so, if you look in the chart on the right, you see that the junior royalty companies are trading at more than double the multiple of the senior producers. So what the market is saying is that it would rather take a worse portfolio of projects, but if it's sitting in the royalty company and you're getting royalties instead of project interests, which is essentially what you're getting with the mining company, it would prefer to own that and will pay a premium for that, which I think is extremely telling in terms of how investors are thinking about it. And this is about us in terms of what we're doing, because we focused on assets that are so strong and really are going to be at the core of the strategic deposits of the world. We already have the longest mine life in the sector at 39 years. And I think that's to be expected because copper mines are much longer life than gold mines. You know, your average copper mine is probably more than double the mine life of a gold mine. So if you're going to focus on the best properties in the sector, you're probably going to wind up having the longest mine life in the sector, or very close to. This is just about our properties in more detail. I don't know how much the audience knows about mining, so happy to answer any questions afterward. This is just sort of the basic information on the projects. I'll start with Taka Taka. You know, this is already a $1.8 billion, 1.8 billion ton reserve, and the resources over another 1 billion tons. So this has the potential to be truly one of the world's great copper mines. It's located 90 kilometers away from Escondida, which is the world's biggest copper mine. So Escondida is in Chile, Taka Taka is in Argentina, same trend, just over the border. Salta province, where it's located, is extremely mining friendly. All the infrastructure is there. So you probably couldn't find a better place to have a major mine. And then when we bought the first piece of the Taka Taka royalty, this was before First Quantum announced their decision to progress the project and that to a construction decision around 2023, 2024. So when we picked up the second piece of the royalty, we already knew that, which gave us even more confidence in the decision to increase our position. The thing that really stands out about these projects is there's very few new projects being moved forward by the big mining companies. This is a very complex endeavor. I mean, this is going to be a $3, $4, $5 billion build. It will take years. It takes enormous expertise to do it. So being able to get the royalties on really the main priorities of First Quantum, which is Taka Taka, Nova Tech and Newmont, which is Nueva Union, Twin Metals, which is Antofagasta, and Dumont, which we think will be a huge priority for someone shortly, I think gives us a very good proportion of the new project pipeline that's coming forward. So if you want to invest in this theme and you want to invest in royalties, these are really in many ways indispensable projects to have in a portfolio. So we're very happy to have them here today. And now we're obviously looking to scale the company even further. Nueva Union, and just moving a little bit over to the right, you know, this is one of the largest copper gold projects in the Americas, and it's also extraordinarily high grade. If you look at it, you know, the grade is roughly 0.9% copper equivalent, which for a project that size is very high. Usually at that size level, you know, even big companies, I mean, if you look at Taka Taka, it's roughly half of this grade. So it has an excellent foundation already at very large size. 2 days after we bought it in 2020, we learned that Teck and Newmont are actually looking to drill the project much more. If you look at the announcement on February 20, 2020. And so they're planning a $152 million drilling program to test the extensions of the deposit. And so given the deposit is already over 1 billion tons of reserves and resources, you could be looking at a truly world-class mine that will emerge from this, and that's very exciting for us. Then the Dumont project, this is the second largest nickel reserve in the world and the largest undeveloped nickel project in the world. It's located in Quebec, probably as supportive a mining jurisdiction as you can find, and it's fully permitted. So we're very excited about that. And then Twin Metals, which is owned by Antofagasta, which is a major copper mining company based in Chile. That's their main greenfield project. They're not doing anything else as far as we know. It's definitely their biggest priority outside of Chile as well. The Minnesota Duluth camp where it's located is truly one of the world's great metal districts. And so then it's a question of when it gets permitted to go into production. But we think that given its size and strategic importance to the United States, eventually this will happen. So Antofagasta owns a project there. Glencore also owns a project there called Polymet. Teck also owns a project right next to these guys called Mesaba. So we think that given the concentration of large companies and mineral resources and reserves there, that it's a question of time when this actually. Then a little bit here about our other efforts. In 2020, we also acquired an exploration royalty. We don't do that too often, but when we see really high potential projects, we think it does make sense. And in this case, we acquired the royalty on the Janice Lake property in Canada, being explored by Rio Tinto. This is a massive camp, over 50 kilometers, already more than 8 kilometers of mineralization. We just got news earlier this week that they're planning a diamond drilling program for this winter. So we're excited to see how that works out. Whenever you see a major being so aggressive in pursuing a drilling program, you always want to try to get that exposure at a reasonable price, because if it is something that they're looking for, then they can go ahead and build that. And that's really exciting for us. And then really about our business model, how we acquire royalties. We buy them primarily from third parties that own the royalties already, not the mining companies themselves. If you want to target premier projects, it's very hard to do a deal with a mining company with a large mining company, because they don't need the capital. They're very well financed themselves. But the people who do need the capital are people who are already holding those royalties more often than not from selling the initial property to the mining company. And so they need liquidity. They'd like to retain some upside. And that's where Nova steps in. If you look at the transactions we've done, we've done the deals for some combination of cash and shares, which gives people the best of both worlds. And I think that explains why we've been successful in building the portfolio to date.
So Alex, feel free to wrap up to answer maybe 1 or 2 questions.
Absolutely. Yeah. Look, this is perfect. Just as a summary, we've all been here from the very beginning. All the founders and the key technical team members. We've built what we think is a great foundation to create a leading company with a focus on the most important commodities and projects. And we're excited about growing it. So happy to take any questions from the audience and go from there.
Sure. So the first one coming from Evan's son, she's asking what your main method in the future royalty returns, how do we channel it back to the shareholders? Will you do dividends or buybacks or something else?
Look, good question. At the point that the company can have a sustainable dividend, we absolutely will. What we're doing right now is we're building a base of value, really by getting royalties on what we think are the premier projects in this space. This should be getting into production between 2025, 2030, I think is realistic, but they also will be producing at that point, I think for 50 years plus, if you look at the trajectory of how these things usually go. And we're also adding to the portfolio as well. So we think for our shareholders, eventually this will be a very large dividend company. But we would like to do that at the point where we can sustain it rather than just rushing with it.
One last question from Jeremy Diller. With the nickel market heating up, how will you continue to develop attractive new royalties?
Well, I think with nickel, the view we have on that is that it is very much about the premier deposits in the local, I would say, jurisdictions where you are, because you're always linked to the automotive supply chain. The whole point of the nickel space, as it's emerging, it's really just an input into the automotive industry. So what we focus on, just like we did with the Dumont project and Twin Metals projects, is we're very much focused on the North American automotive space at the moment. And so if we see projects that fit that priority, we'll add to it, but we won't be adding projects just because nickel is a very different market. It's not a global market, it's a local market in many ways. Just so you look at in China, for instance, the Chinese automakers primarily get their nickel from Indonesia, I think. And I think that's going to be the supply chain in Asia. In the Americas, it's going to be Canada, US projects feeding that. So if we see a project that can compare to Dumont and Twin Metals, then we absolutely would add more to it.
So thank you, Alex, for your time here today.
Thank you very much. Much appreciated.